even after the ease of the war, maybe the forms open, the sulfur will export to Indonesia, but it will still maintain at a relatively high level, maybe around 800 to 900 US dollar. So we can see, next we will analyze the impact of the nickel benchmark adjustment on MHP, and also impact highly impacted by the sulfur price. On the middle is the latest MHP cost. We can see that based on this second scenario, we use the sulfur price is around 1,000 US dollar, and for the 1.2 electric ore, we use the price is 30 US dollar. And at this kind of scenario, the MHP cost for the total MHP cost will be around 18,000 US dollar. And the third scenario is based on a very extreme situation, which means the 1.2 electric ore will the spot price will equal to the new HPM formula, and the sulfur price will increase to 1,200 US dollar. At that time, the MHP cost will increase to nearly 22,000 US dollar. That's pretty higher. And if we plus the processing fee from the MHP refining coal, which means at that time the cost the non-ingredients, if they buy MHP outside, the total processing fee to produce refining coal will reach to 240 US dollar. So that was really a large pressure for the whole MHP producer and also for refining coal. And this is the intermediate profits comparison between the high-grade nickel matte and also MHP. In the past 23 years, I think all the industry players has a consensus that is the MHP has a higher profitability. Actually, it's true because the low grade of the low cost from the limonite compared with high-grade nickel matte used for separate, which price is pretty much higher. But this year, start from this year, things changes because the increased price of the sulfur price. And most of the MHP producer, which they are sourcing now, their profitability is nearly to zero. Maybe some of them, the profit is still negative. So that's really too harm to the most of the MHP producer in Indonesia right now. And for the high-grade nickel matte, as we can see from the profitability diagram, it's in a very sharp window from the second quarter and third quarter, which means from the second quarter and also to the third quarter, we might see increase from the transaction volume of the high-grade nickel matte. The profitability is pretty well, and also we have still see the increase of the operation rate in the most of the MHP program in recent. And next, we're going to talk about the nickel final product, nickel sulfate, nickel pig iron, and also refining. For the nickel sulfate, we think that in the future, from the global side, the nickel sulfate supply and demand balance will maintain a very tight balance. It will highly depend based on the demand from the new energy from the ICM. And from the new capacity, we might now see large increase in China, because in China it has been an overcapacity situation for most nickel sulfate producers, and from overseas we will see the new pressure putting option in Indonesia and also in the Korea. And let's come to the nickel pig iron. With the decreased rate of the saprolite in the next 5 to 10 years, and so the NPI will still face the same problem, which means the NPI grade will still decrease. For next 5 years, we've seen the high-grade nickel matte decrease from this year to next 5 years. And the nickel grade of the high-grade nickel pig iron will decrease to around 17%, which means for the most like the stainless steel producer in China, now they use nearly 70% to 80% of the nickel raw material is based on high-grade nickel matte. If the nickel grade decrease in the nickel matte, they might use more from the refining. That will give the real demand support from the refining coal. If the most of the stainless steel producer in China, they increase the raw material producer. And so from the high-grade NPI supply demand, we think that starting from this year and for the next 5 years, the NPI will still face a tight balance, and maybe some year will face a shortage, which means like the stainless steel producer in China, it will increase the purchasing from the refining coal, increase them as a raw material. And this is the very also the nickel premium, reserved in the 2026 as the grade-based pricing divergence extends to the 2030. And we can see that high-grade API premium and will decrease will increase because the high nickel ore graded of the API will become less, and maybe starting from the 2030, the main supply for the nickel pig iron, the degree will become the 8%, 10%, but now it's 10 to 20, 10 to 12. And one interesting thing that happened recently is the production line change from producing MPI to producing aluminum. As we can see from the comparison of the per kilowatt hour profit, producing aluminum is 36 times higher than the nickel pig iron. And we think that this scenario will take place in the starting from now, and we still see in the third quarter there will be still some cut production of the MPI to give the electricity to produce more aluminum. And maybe in the third quarter or fourth quarter, with the new power generation interruption, we will maybe the MPI production will ramp up. And the next final is about the LME nickel price. And started from the fourth quarter of last year, we already see the increase of the LME nickel price. Now the recent LME nickel price is around 19,000 US dollar. And in the future, we might see that if the LME nickel price, you can see from the red line, if the LME nickel price is increased, and if the price is higher than the 20,000 US dollar, we might see some of the Australian miners that maybe back up. Not yet, we can see if the LME nickel price will keep increased. And from the supply and demand and from the cost forward, we might see that this year the LME nickel price range will be around 18,000 to 20,000 US dollar. And next is from the demand side. The very promising future is about the new energy, it's about EV. And but we have already seen that there will be a little shift from the chemistry with the comparison between LFP and the ICM. And from this PowerPoint, we can see that we gave the CAGR of the global lithium battery production is 18%, and most will be driven by the EV. But ESS is increasing very fast in the recent years. And for the chemistry, still the large market share will be LFP, and we see